Intel, ticker INTC, has been making some waves lately. And after a deep dive, we've got some fascinating insights for you today. Is this a turning point or just a blip? Let's find out. So, what's the buzz around Intel right now? The market narrative is a bit of a mixed bag, leaning towards cautiously optimistic. We're hearing whispers of potential big investments, like that news about Nvidia looking to put $5 billion into Intel's chip facilities. That's a huge vote of confidence, right? Plus, the whole AI PC trend is certainly adding fuel to the fire. However, there's still a healthy dose of caution out there, with many keeping an eye on the intense competition and whether Intel can truly execute its ambitious plans. It's a story of potential upside, but with very real execution risks. For those new to Intel, officially Intel Corporation, they're giants in the world of designing, manufacturing, and selling computer products and technologies globally. Think CPUs, chipsets, data center solutions, and increasingly specialized chips for AI and autonomous driving. They've got a wide range of segments, from client computing to their foundry services. Now, management is certainly putting on a brave face, talking up their strategic progress and the growth in AI PCs. But how does this stack up against the reality? Let's break it down through our scenario analysis. All right, let's bridge that market narrative with the hard numbers and Intel's own guidance. We've built out 3 potential scenarios to capture the range of possibilities. First up, the base case. This is our middle ground scenario, assuming Intel continues to execute its strategy, sees moderate growth in its client computing group, partly thanks to AI PCs and the Windows 10 end-of-life cycle, and a steady ramp-up in their Intel Foundry Services, IFS. That Nvidia investment really helps here, suggesting potential future wins. We're giving this a 50% probability because the technicals have shown some positive momentum lately, but we also have to acknowledge the execution risks. In this base case, we project revenue growth, stabilized net income margins around 5 to 7%, leading to an estimated EPS of about $167 in 2025, growing to $250 by 2028. Applying a forward PE of 15x to that 2028 EPS gives us a fair value of $37.50. Now, let's look at the upside, the bull case. This scenario imagines Intel hitting it out of the park. We're talking a significant acceleration in their foundry business, perhaps driven by those big partnerships we're hearing about. Strong AI PC adoption and flawless execution on their manufacturing roadmaps are key here. The technical breakout we'll discuss shortly really supports this upside potential, so we're assigning this a 30% probability. Under this bull scenario, with aggressive revenue growth and improved margins to 8 to 10%, we see EPS reaching $4 by 2028. With a higher PE multiple of 18x, the fair value shoots up to $72. Finally, the bear case. This is where things get a bit more challenging. Here, we anticipate intensified competition from AMD and other AI chip players, slower adoption of Intel's products, and potential delays in manufacturing tech. Frankly, Intel has faced execution hurdles in the past, and while the stock has moved up, it could be a false signal. Given these risks and the competitive landscape, we're giving this scenario a 20% probability. If this plays out with more conservative growth and margin compression down to 3 to 5%, EPS might only reach $150 by 2028. Applying a more cautious PE multiple of 10x, we arrive at a fair value of just $15. All right, let's pull up the chart for Intel. Here's what's really catching my eye from a technical perspective. INTC has just broken out of a multi-week consolidation range, trading between roughly $18.50 on the low end and $26.50 on the high end. This breakout suggests that the selling pressure might be easing and buyers are stepping in. Now, if this breakout holds, the next significant upside resistance level to watch is around $37.60. This technical signal is a key factor influencing our probability weighting, especially for the base and bull cases. So, where does this leave us? Synthesizing the scenarios, the weighted average fair value is around $37.50. From the base case times 50% plus $72, bull case times 30% plus $15 bear case times 20% equals $18.75 plus $21.60 plus $3 equals $43.35. With the stock currently trading near the upper end of its recent consolidation and showing a technical breakout, the sentiment is leaning positive. My verdict? The bottom could be in, or at least we're seeing a significant shift in momentum. The $37.60 resistance level from the technicals aligns closely with our base case fair value, making it a critical point to watch. Based on our analysis, potential buy levels of interest would be around the breakout zone near the $26.50 to $29 range if we see any pullbacks. The $37.50 level from our base case and the technical resistance is a key target, and levels closer to the $15 mark in the bear case would represent extreme value, though less probable. What do you think about Intel's prospects? Is the bottom truly in, or are you bracing for a different outcome? Let me know in the comments below. And if you found this deep dive valuable, please hit that like button, subscribe to Is the Bottom In for more analysis, and ring that notification bell so you don't miss our next episode. Disclaimer: this video is for informational and educational purposes only and does not constitute financial advice. Investing in the stock market involves risks, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own due diligence and consult with a qualified financial advisor before making any investment decisions.